So we're lucky to have Citi's U.S. Software Equity Research Co-Head, Tyler Radke. And Tyler, I know you're a fundamental guy, but I look at something like this. It's been key support for a long time. It's already in this sort of free fall mode. It just worries me that there could be a lot more to the downside.
Yeah, it's starting to feel a little panicky out there. Look, I think the elephant in the room, you hit on it in the opening segment. These AI companies are adding unprecedented amounts of revenue. Anthropic just crossed $30 billion of run rate revenue. They were at 9 at the beginning of the year. So those two companies, OpenAI and Anthropic, are going to add more new revenue this year than the entire software industry is going to add, right? And so I think the key question is, where are those budgets going to come from? That's what investors are worried about, and I think that's what's kind of causing this pressure in the space.
So you and some other software analysts have been saying, hey, listen, this is in a way ridiculous because these software companies are going to use AI to their advantage. So the CEO of Snowflake said the company sees strong returns on AI investments themselves. So they made this comment yesterday. Today, the stock is down 11%. When you can't circle the wagon, it's tough because no one's listening to this.
Yeah, and look, I think there's 80 publicly traded software companies in the U.S., maybe more, right? So all these software companies are a little bit different. You have cybersecurity stuff, which clearly benefit from what you sort of talked about. Snowflake is a very different company than, say, Salesforce or Adobe, right? They are tied to inferencing, to data, to volumes of queries, right? So I think they're in a much better position than some of the traditional ones.
No one's believing in them right now, though. I mean, again, a lot of them are positioned well, but every time they try to say, hey, AI is going to help us, it's like sort of Missouri, right? Show me. But there's some names that are doing really well. Last time you were here, you gave us Core Weave. It's up nicely. They had a big deal with Meta, and of course, it's up again today. You also have a buy on NBS, right? And this is on the verge of breaking out to a new all-time high.
Yeah.
What distinguishes them from the rest?
Well, they're almost the opposite trade for software, right? So what does NBS and Core Weave do? They sell you the GPU capacity to run, train, and do inferencing on these models. So the fear is that AI is going to take over this software category, but you need the GPUs and the infrastructure to run that. So that's what these companies do. They're also benefiting. If you look at spot price for on-demand GB200s, these GPUs, it's very strong. So those pricing should roll in, especially for a company like
It's really amazing, the whole, the pricing and the visibility. Pricing for as far as the eye can see looks like it's going to be strong.
Yeah. For sure.
I got to ask about Salesforce because in my mind, this is sort of the proxy, right? For a long time, this was sort of the poster child of what was great for software. A popular, CEO, very successful, Mark Benioff. They survived a couple of these scares before, but they're collapsing as well. And again, Mark Benioff, if he can't convince people, who can?
Well, it's tough. I think ultimately investors don't need a CEO to convince them. They need to see numbers. They need to see growth accelerate. And you've seen Salesforce continue to slow, right? They're doing things like a $50 billion levered buyback. It's clearly not helping the stock.
Right. Maybe that was a sign of, it was working against them, maybe.
Yeah, maybe. I mean, look, I think they need to have their AI product work and reaccelerate their growth profile. It's as simple as that. We don't think that's going to happen, at least in the near term.
All right. You do have some buys, Microsoft, Oracle, ServiceNow. I'm in this. I'm getting annihilated in this. I do want to ask about Oracle because it feels like the tide is shifting. The narrative was, okay, they got over their skis, too much debt, and now it's like, you know what? We believe the backlog is real and that the demand is real. It feels like people are turning the corner.
Oracle, we just talked about Core Weave and NBS. Oracle has a lot more in common with those companies. OpenAI, some of these big AI customers are customers of Oracle. They are, over $500 billion of backlog that they're going to ramp in. We think they're going to grow earnings and revenue between 25-30% over the next 3 to 5 years.
Got a minute to go. Some high risk stuff. I saw somewhere yesterday, somewhere I read somewhere that Anthropic is crushing Palantir. I don't know if that's
true. I think
true.
It was a tweet.
It was a tweet? Okay.
That is definitely not what we're seeing. If anything, they're partnering together. You think about the Anthropic contract in the U.S. government that was widely discussed earlier. Palantir and Anthropic go to market together. Palantir's growth has been accelerating kind of in lockstep with Anthropic, obviously different types of businesses. So we think they're very well positioned. They're not at risk. And I think Shopify, it's a play on e-commerce. It's easier to set up a business and set up a website. They're going to benefit. and Mongo is sort of a benefit on more of this code being
And it's
generated.
crazy because Mongo keeps posting these amazing earnings. It gets one day in the sun, and then, oh, you're a software stock? You know, and they start to pound it again. Ultimately, though, you see maybe some amazing opportunities when the dust settles, all right?
I do. I think you got to be selective. Again, our preference is to own companies like this, companies that aren't tied to seats or CRM systems or sort of this old world of software. You want to go where the AI models are going. Mongo, we think all these companies sort of benefit.
Good stuff.
All right, appreciate it.
Glad you came in.
Thank you.
All right.